The world of digital assets and cryptocurrencies has been expanding rapidly in recent years, but it has also faced significant hurdles when it comes to accessing traditional banking services. Regulators' warnings and a series of bank failures have caused many banks to become wary of working with crypto clients. However, a handful of middlemen companies have stepped in to help keep the industry banked, allowing digital asset clients to access banking services through indirect banking arrangements. The role of middlemen companies. Middlemen companies are firms that provide intermediary services between banks and their clients. In the case of digital asset clients, these middlemen companies store cash on behalf of their clients in their own bank accounts or coordinate with banking partners to get accounts in their clients' names. These companies also provide a range of other services, such as compliance monitoring, anti-money laundering checks, and other regulatory compliance support. The importance of indirect banking. While indirect banking isn't unique to the crypto industry, its importance has become more pronounced due to the limited number of banks willing to work with digital asset firms. Banks have become increasingly cautious about working with crypto clients due to concerns about fraud, money laundering, and other regulatory issues. This has created a significant barrier to entry for many digital asset companies, which has led to the rise of middlemen companies as a critical component of the industry's infrastructure. How middlemen companies help crypto firms bank. Middlemen companies offer a range of services that help digital asset clients access banking services. One of the key services provided by these firms is access to bank accounts. Middlemen companies have established relationships with banks that are willing to work with digital asset clients. They can help clients open bank accounts and provide ongoing support to ensure that the accounts remain in good standing. In addition to providing access to bank accounts, middlemen companies also offer other services that help crypto firms manage their finances. For example, they can help clients manage their cash flow by providing cash management services, such as managing incoming and outgoing payments. They can also provide access to credit facilities and other financial products that help clients grow their businesses. Compliance and regulation. One of the biggest challenges facing the crypto industry is regulatory compliance. Digital asset companies must comply with a range of regulations, including anti-money laundering, AML, and Know Your Customer, KYC, requirements. Failure to comply with these regulations can result in significant penalties and even criminal charges. Middlemen companies play a critical role in helping digital asset clients navigate these regulations. They provide compliance monitoring services and help clients establish and maintain AML and KYC processes. They also work closely with regulators to ensure that their clients are in compliance with all relevant regulations. The future of indirect banking in crypto. As the crypto industry continues to grow and evolve, the role of middlemen companies is likely to become even more important. The limited number of banks willing to work with digital asset clients means that these firms will continue to be a critical component of the industry's infrastructure. However, as the industry matures and regulatory frameworks become more established, it is possible that banks will become more comfortable working directly with crypto clients. The benefits of indirect banking for crypto firms. Indirect banking has several benefits for crypto firms. For one, it allows them to access banking services that would otherwise be unavailable to them. This is critical for companies that need to manage their finances, pay bills, and access credit facilities. Indirect banking also provides crypto firms with a level of privacy that they may not be able to achieve with traditional banking services. Many crypto firms operate in a highly competitive and sensitive environment, and the ability to keep their financial transactions private can be a significant advantage. Moreover, middlemen companies provide a level of expertise and knowledge that may be lacking within the crypto industry. These firms have experience working with banks and regulators and can provide invaluable advice and support to their clients. The risks of indirect banking for crypto firms. While there are many benefits to indirect banking, there are also risks involved. One of the biggest risks is the potential for fraud or mismanagement of funds. Crypto firms are entrusting their funds to third-party companies, and there is always a risk that these companies may act inappropriately. Another risk is the potential for regulatory non-compliance. While middlemen companies provide compliance support, the ultimate responsibility for compliance lies with the crypto firm itself. Failure to comply with regulations can result in significant penalties and legal issues. Finally, there is the risk that the relationship between the middlemen company and the bank may break down. If the bank decides to stop working with the middleman company, the crypto firm may lose access to its banking services. Regulatory challenges facing indirect banking in crypto. The crypto industry is highly regulated, and this presents significant challenges for indirect banking. Regulators are concerned about the potential for fraud, money laundering, and other illegal activities, and they are closely monitoring the activities of crypto firms and middlemen companies. In some cases, regulators have taken action against middlemen companies that they believe are not complying with regulations. For example, in 2018, the U.S. Securities and Exchange Commission (SEC) charged 2 middlemen companies with operating unregistered broker-dealers in the crypto industry. These regulatory challenges make it critical for middlemen companies to prioritize compliance and risk management. Companies that are not able to meet regulatory requirements may find it difficult to survive in the industry. The future of indirect banking in crypto. The future of indirect banking in the crypto industry is uncertain. As the industry continues to evolve, it is possible that banks will become more comfortable working directly with crypto firms. This would reduce the need for middlemen companies and could make banking services more accessible to a wider range of digital asset clients. However, it is also possible that the regulatory environment will become more complex, making it even more challenging for crypto firms to access banking services. In this scenario, the role of middlemen companies would become even more critical, and we could see the emergence of new types of intermediary firms that specialize in different aspects of the industry. Conclusion. Indirect banking is a critical component of the crypto industry, allowing digital asset clients to access banking services despite the reluctance of many traditional banks to work with the industry. Middlemen companies provide a range of services that help crypto firms manage their finances, comply with regulations, and grow their businesses. However, there are risks involved, and it is critical for crypto firms to carefully evaluate the benefits and risks of using indirect banking services. As the industry continues to evolve, it will be interesting to see how the role of middlemen companies changes and adapts to new challenges and opportunities.